Further discussion, Mr. Michelassi.
Thank you, Mr. Chairman. I beg your indulgence here for 1 moment. Let me tell you why I'm proud to be a DuPage County Board member. I'm proud to be a DuPage County Board member because nobody sitting in this body today is anti-business. Nobody wants to see our state create a climate that harms the businesses here in DuPage. And nobody on this board wants to increase taxes on our residents. I'm glad to say we've kept our property tax levy at the same level as long as I've been a board member here. I'll always be proud of that. That's why I'm glad to be here as a DuPage County Board member. I've attended the recent meetings of the Economic Development Committee, and until last week's vote, I was content to consider those meetings as matters of public information. However, today we're being asked to vote. As I understand, our state legislative agenda mentioned the graduated tax proposal and that we as a board were to conduct discussions on it. But it was never a part of our agenda to render a resolution like the one we see before us today. I believe that approving this resolution is injecting us into a discussion we should be having as a state, not as a county. Already, the special interest groups and grassroots organizations on both sides of the issue are mobilizing to a profound extent. Lobbying of all our state legislators is in full swing. This is a state issue we have little to no input on outside of our legislative agenda, and in my opinion, that is where the issue should have remained. With this resolution, we are inviting a statewide debate into our county process, and we are undertaking business that is not our own. Ultimately, this action will amount to little more than a talking point for one side or the other. It will not be a show of DuPage County exemplifying leadership in this state. I would rather not see the good work we do here become a political football for someone else. I also respect this body as a legislature of its own, and not a jumping off point for politicians looking to gather credentials to run for higher office. I was glad to see one of our state legislators finally come to Wheaton to talk to us. Representative Sandak is, I believe, the first state legislator who arrived to speak as a matter of committee business in the 5 years I've been a board member. Now, in the past, we've spoken about meeting with state legislators regularly through the legislative committee, but this has yet to come to fruition. It would have been gratifying to have a legislator speak to us about a bill actually pertaining to county government. For example, when the consolidation bill was under discussion last year. The fact that that did not occur, while Representative Sandak did come to speak on this issue, I think is very telling as to the high political profile of this issue. To put it another way, consolidation, like what we did today with the Fairview Fire Protection District, that doesn't get the headlines, but taxes always do. I don't believe any county committee has ever held multiple meetings on an issue outside of our jurisdiction either. Most committees have seemed content to operate as they are charged under our rules and not to waste the taxpayers' time with discussion we're not being paid to undertake. If the justification for this resolution is the supposed impact a graduated tax would have on county residents and businesses, then what is to stop us from holding hearings on all manner of state issues, like the minimum wage, like a cut to the corporate sales tax, or for that matter, the entirety of the state's budget? If that is business you want to undertake as a DuPage County Board member, I would suggest that you currently occupy the wrong elected office. I would also be remiss if I did not point out the most important fact to me as representative of District 5. While this board, through the Economic Development Committee, is now undertaking an intrusive role in state policymaking, it has lagged on retaining businesses already here. Last year, when OfficeMax was in talk with local and state officials about the future location of their corporate headquarters, the Economic Development Committee held no meetings concerning the relocation. There was also no discussion on a bill in the state Senate introduced by one of our own DuPage legislators to try to keep OfficeMax here. In a true matter of economic development, the Economic Development Committee took no action. And subsequently, a prominent Naperville employer left my district, taking 1,600 jobs with it and all that entails. In addition, I would hope the board recognizes that the testimony offered to the Economic Development Committee consisted of 3 speakers against the graduated tax and 1 in favor, hardly a balanced approach. The actual text of the proposed constitutional amendment was never presented to the committee as a matter of business. The committee did not, in fact, see that text until it was included in one of the speaker's presentations last week. The language is also not included in our resolution today, nor are the specific bills proposing the amendment included. But jurisdictional and procedural issues aside, if these are not enough for you to vote against this resolution, let's talk facts. First and foremost is the fact that there is no schedule of tax brackets included in the amendment our resolution opposes. None whatsoever. The amendment itself only gives authority to the state legislature to create a graduated income tax system. No rates are mentioned at all. So without rates, what exactly are we opposing? Certainly there are some plans out there. I know the Center for Tax and Budget Accountability has offered one. The bill's chief sponsor in the House has offered another. But neither of these are what's being put on the ballot in November. So in a way, we're not only getting into an argument we shouldn't be getting into, but we're getting into it far too early to even stake so definite a position. Unless, of course, we're just opposing the concept of a graduated tax system outright. If we're going to do that, let's look at some numbers. The median household income in DuPage County is $78,000. A claim, therefore, is made that a graduated income tax system would disproportionately affect DuPage residents. In both tax bracket proposals I've seen, taxpayers would see no increase in their rate from its current level unless they make $100,000 a year or more. No increase. In fact, under both proposals, between 83 and 89% of Illinois taxpayers would either see no rate increase at all or would even see their rates drop. If we use figures from the Census Bureau, that figure becomes 62% of households in DuPage County. Still a clear majority. Would I want to be able to tell 62% of my constituents that their income taxes won't increase and might even drop? Yes, I would. Many here would have the state, if it was going to raise taxes, raise them on 100% of us. The supporters of the flat tax state that a graduated tax would increase taxes on 85% of households. The income figure that we've heard mentioned is $18,000 and above. Essentially, they are calling the maintenance of the current 5% flat tax rate an increase. That's misleading. The better way to state the fact is that any creation of a graduated tax system will include the current 5% tax rate for some income levels. Some rates could be lower, and some could be higher, but again, we have no rate proposal in front of us. I'm also a representative of my district. In 2008, the Paul Simon Institute at Southern Illinois University published a poll that asked Illinois residents about their state government, its level of public service, and some proposed budgeting and policy changes. That poll showed 66% of Illinois residents supported a graduated income tax system that imposes higher rates on higher income levels. A newer poll, released last summer from the firm of Gerstein, Bosian, and Agnew, showed that the support for the graduated income tax system had grown to 77% among Illinois voters. In other words, not only have Illinois residents resoundingly supported the idea of a graduated tax system, they've done so for years. And their support seems to be growing as the income inequality in our state continues to deepen. So as a representative of my district, it would be astoundingly ill-informed of me to vote to oppose a graduated tax system. My final point is this. Our 2014 state legislative agenda includes an effort to restore us as a county government to the 10% share of income tax collections we previously were given. Unless I'm mistaken, the projected increase in revenue from a graduated tax system would in turn come back to us at the county in the form of a greater income tax share. This is money we could use to pay operational costs in, for example, public safety, stormwater retention, transportation, and the convalescent center. So if we oppose the concept of a graduated tax, we oppose the chance to make our own budget even more fiscally sound, and perhaps may even be opposing the chance to abate property taxes for the first time in years. I don't need to remind everybody in this boardroom, that DuPage County is second in the state for property tax prices. This county did not say no to the American Recovery and Reinvestment Act funding it received in 2010. I doubt we would say no to an increase in money coming from Springfield. So whether you think about this issue on jurisdictional grounds or on logical, factual grounds, the choice is clear. Your vote on this resolution should be no, and I encourage you to make that vote.
Thank you. Further discussion. Mr. DeCiani.